Ms. Mersinger, digital assets and blockchain technology could democratize finance, giving every American, no matter their background, access to financial services at lower costs with greater speed than ever before. To achieve this revolutionary potential, there is widespread agreement from industry leaders to the President and bipartisan members of Congress that we must provide clear rules that foster innovation and protect investors. And listening to you, and frankly, Mr. Levin as well, I think Mr. Levin said we need a fundamentally new model because we're talking about, frankly, a fundamentally new world. It's not new today, but it's new to those of us who are going to pass legislation. And you talked about the importance of the existing laws as we see them are inadequate and, frankly, not applicable to this new opportunity to be the crypto capital of the world. From your perspective, why is regulatory clarity so important, and what are the risks if we fail to provide certainty for innovators and everyday Americans?
Thank you for that question, Senator. Traditional bank regulations are not fit for purpose for digital assets and blockchain technology. Those regulations are meant for centralized intermediaries, and that's not what we're dealing with here. We need a regulatory structure that is fit for purpose. Otherwise, this patchwork of regulations and state laws and the industry trying to piece together what is their regulatory framework doesn't work, and it's going to push and continue to push innovators offshore. The most important thing we can do is create a framework that gives clarity. The status quo doesn't work. We need to be able to have responsible innovation here in the United States. We need a framework that provides customer protections. And we also need to make sure that whatever framework we put in place, that it ensures that U.S. American values are what this new what this new technology is based on.
Thank you very much. Mr. Levin, there's a common belief that money laundering is easy with crypto, but the truth is, it's not. Blockchain technology creates a permanent, traceable ledger that can help law enforcement catch those bad actors. I've said it before, so I'll say it again. It's far easier to track something that has a digital footprint than something that does not. However, some of my well-intentioned colleagues seem to think that crypto is tailor-made for money laundering, when in reality, it's a whole lot easier for criminals to hide their tracks with cash. What are the most common misconceptions regarding the role of digital assets in illicit finance? And what rules do digital asset market participants already comply with in this space? You talked about, I think it was a couple $100 million that had already been seized by working together. I think the more we illuminate how the industry is already working with law enforcement, the better we understand the digital footprint versus cash.
Thank you for the question, Senator. The way that we see this market is that the majority of activity inside cryptocurrencies and on blockchains is legitimate activity. There are trillions of dollars of payments that are made using stablecoins every year. A lot of that, the vast majority of that, is not illicit activity. The illicit activity that we estimate at Chainalysis is less than 1% of the overall activity that occurs on these blockchains, which is equivalent to what we see in traditional markets, and in fact, oftentimes less than what we see in traditional markets. And so criminals themselves and gangs and whoever else we're dealing with understand that it's not possible to launder vast sums of money in these networks, and that the majority of the activity is legitimate. We do see, though, that when it comes to threats, for example, with fentanyl or pig butchering or terrorist financing, the industry comes together with law enforcement to collaborate on solving these cases. And we at Chainalysis have powered thousands of investigations that have spanned international geographies, cross-national boundaries, to be able to actually capture criminal proceeds in these investigations. The centralized services that have been helpful with this are subject to the AML and BSA obligations and have been from FinCEN guidance in 2013, and so have a very deep experience in actually helping law enforcement in these instances. And it's through that public-private collaboration that we can actually, solve the problems of illicit finance.
Thank you very much.